Hey everybody, Economic Ninja here. I hope you're doing well. The title of this video is something about getting your money out of the bank and doing it now. And this isn't one of those moments, it's panic, scream, go race down to your bank and pull your money out. But I'm going to show you why you need to start looking into this right now. We've been covering um, the banking situation for almost 2 years, ever since this channel started, trying to prepare people in their minds and in their hearts for the day where people are literally racing down to their banks and pulling money out in droves. That's actually happening right now. And it happened during the Great Depression, and there were so many people that didn't know what was going on. All those photos, and I'm going to talk about what's going on with Credit Suisse in just a second. All those photos and a video of people banging on the doors of the bank during the run on the banks in the Great Depression as it started um, was just a small amount of people. If you look at all the photos that led to the Great Depression, it's just about 150 people in a photo banging, trying to get into a bank, right? Yet that event led to widespread losses in the stock market, in investments all across the board, and led to a period of literally 14 years of a depression where everything was depressed. Values of all kinds of asset classes, people were out of work, horrible things were happening, right? Right now, you are having those moments where people are banging down the doors. And this story I'm going to go through and I'm just going to touch on a little bit of it. And then I'm going to talk to you. And I'm actually going to give some advice from an investor of 6 years now, someone that has made money and lost money, right? And I'm going to give you advice on what you can do right now, practical steps to get ready for this and not survive it. I don't want you to survive. I want you to absolutely dominate this crash, and I want you to crush it. I want you to become wealthier than you've ever been. So this story is out of the Zero Hedge. It's entitled Credit Suisse Craters After Staggering Bank Run and Warning of Continued Losses. Now, we've been talking about this bank, Credit Suisse, and I've talked about the swap lines, the secret swap lines between America, between the Federal Reserve, and between them trying to hold this up. And right now, what you are witnessing, or maybe you're not, and hopefully I'm waking some new people up. Hopefully this video gets shared out to where new people wake up and they realize what's going on. But what's happening is banks are failing around the world little by little. And as the little ones are failing and their losses get carried on to a larger bank and then a much larger bank, now we're seeing worldwide a massive bank failing, right? We've got Deutsche Bank that has massive problems, right? HSBC has had massive problems because of what's going on over in China with the real estate losses. Now we see Swiss banks getting hit. So check this out. It says on Thursday, Credit Suisse shares tumbled as much as 12% after the Swiss bank unexpectedly posted a bigger than expected loss for the fourth quarter and even more unprecedented client outflows, exacerbating the difficulty for new CEO Ulrich Kroner in returning to profitability by next year. Now, I did a video when BlockFi, or what was it, FTX was collapsing. I said, you're going to see the truth hit the banking system in quarter one of 2023. And you're going to see the losses from that. Now, I'm not saying those losses are transferring into Credit Suisse losses, okay? But I said you're going to see massive implosions in the banking system in the first quarter. Why? Because I said quarter four numbers are going to be coming out. And then quarter one and quarter two numbers are going to be horrible for the worldwide banking system, right? And I've been giving you little tips on how to diversify, how to get multiple bank accounts, how to have different types of banks, and why you want different types of banks, right? Not all banks are going to fail. I want people to understand that, all right? You know, you could be doom and gloomy all you want, but I'm telling you, if with proper diversification, you're going to be okay, all right? Now think about this. Every time a bank that's publicly traded loses value in its stock, it has a harder time trying to raise money that it needs so desperately as it's losing money. All right. So you can see how the problem gets exacerbated, right? All right. The second largest Swiss bank, although it's probably far smaller now because of share size and what's going on with the outflows, posted a fifth straight quarterly loss of 1.39 billion Swiss francs, which equates to 1.5 billion US dollars, worse than consensus estimates of a 1.14 billion loss. That is a massive difference. Massive difference. As revenue of a little over 3 billion Swiss francs also handedly missed expectations of 3.35 billion. But while the operating loss was hardly a shock for a bank which has been in a constant state of chaos and turmoil, what stunned analysts was what KBW analysts called a quote unquote, quite staggering level of customer capital outflows, which hit a record 110 billion francs in the quarter. One quarter, 110 billion francs were withdrawn. That is a bank run. You are watching a bank run. See, people think bank runs happen in one day, but they absolutely do not. They happen over time. And I want to bring you back to 2008 when I was already prepared and ready, as much as I could have been, sold all my homes, all my real estate properties, except for 3 properties. I held 3 properties. By the time Bear Stearns closed their doors in the spring of 2008, I was beside myself going, how can nobody see that the economy is collapsing right now? We are crashing. And they didn't. They didn't see it. But it wasn't until Lehman Brothers about 4 months later that all of a sudden everything changed for everybody. It's like, are you kidding me? I don't want you to be late. Right now, what's happening in Credit Suisse is staggering. This is way worse than what happened to Lehman Brothers. People don't understand that. But what's crazy is, think about this. Here, few months ago, I was talking about Credit Suisse and how this bank is going under. And the Federal Reserve has an emergency swap line. It's not going to save it. It's not going to be able to save it. Because at a certain point, the Fed's going to go, crap, we need to save ourselves. Because we're a private bank. The Fed is a private bank. They are literally telling you 3 months ago, oh, it's okay, we're going to return to profitability next year. I said back then that is an absolute lie, ball-faced lie. Oh, and that's why you have a new CEO too. This is the kind of stuff that happens to big corporations as they collapse. The CEO that did it all goes, I'm out, and pulls the ripcord and tosses the parachute behind him and flies out the back of the plane. And this new guy that always just wanted to be somebody's boss, so I'll do it. And everyone's like, yeah, you're stuck with this one. And they have no idea they're the scapegoat. So now the scapegoat is telling you, yeah, it looks like we're going to have a hard time. I said we were going to be profitable next year. Yeah, of course you did. It would be cool if you just told us the truth, but you're not. So the facts are, as money comes out, sucks out of that bank, right? They've got a lot of obligations that are going to crap in a handbasket really quick. And those bad assets are in pension funds around the world. They are tied to other bank obligations. And those other banks are now going to feel the tug and the pull on Credit Suisse. And that's why we're always looking for what's called contagion, the contagion effect, financial contagion effect that ripples around the banking sector when a bank fails. No matter how big or small, there is a contagion effect. But as one small bank pops off and goes away, another one pops off and goes away, what you're looking at is the contagion effect grows and gets worse and worse. And now we are at the second largest bank in Switzerland. Think about that. Remember when everybody would put their money in Swiss banks because they're so safe? Now they're running away. So what you imagine in your eyes, in your mind, by the great financial collapse of 29, right? The crash of 29, the Great Depression. All you see those people banging on their doors. The photos are just about 150 people, 200 people. Yet that event caused everything you saw in the Great Depression. The contagion effect. That's happening right now. I've been warning about central bank digital currencies. They are coming. They are going to come in the middle of a crisis. I keep saying that, and I will say it again. A crisis. We are in a 3-year crisis. Matter of fact, it's 4 years now, almost 4 years, because it started in September of 2019 when the interbank lending rate collapsed because banks were in a lot of trouble and the Fed needed to do something. So they dove interest rates down, but they couldn't just come out and say, hey, we're diving interest rates down. The banks are collapsing. They needed a reason. Think about that, guys. What happened 1.5 months or about 4 weeks after the interbank lending rate collapsed in September of 2019? They had their reason, guys. This to say, rich people buy gold and I'm not telling you what to do. I'm going to tell you in a second. I'm going to give you some advice, but this isn't financial advice. I buy gold because I believe that it's going to hold its value better I don't dive all of it into gold. You still want cash. You want a core cash position, or that's what I want, because I want to take advantage of little deflationary downturns. The Ninja is going to be driving a Ferrari pretty soon, but it's going to be a Ferrari that costs $25,000. I know it sounds crazy, but I'm going to literally do a video one day where I just bought a Ferrari for less than a Toyota Camry. Now, this is the advice I'm going to give. Right now, the biggest thing you do, besides separating your bank accounts and being diversified, invest in yourself. Invest in yourself. Learn some new skills right now. Please learn some new skills. Whether it be going and getting a license, I wouldn't suggest real estate license. That's what I put in my course. I would suggest learning new skills right now and being able to adapt to your environment, and then diversify. Just get out of debt, guys. Get out of debt. Right now, you have money in your hand, but who's to say that tomorrow we don't have a big bank exodus in America, and all of a sudden things start getting tight, and then more and more layoffs happen. Think about that, guys. I hope you got something out of this. If you did, let me know in the comment section. And if you don't like it, let me know in the comment section. I want to know what you think. All right, guys, the Economic Ninja is out.